Hello, everyone. Welcome to the May WASDE webinar with DTN and our lead analyst, Todd Hultman. Sorry for the delay. We had a few technical issues getting loaded into here, but glad to see we've got a group with us today. My name is Greg Horstmeyer. I'm editor-in-chief at DTN, and I'll be moderating the event today. Of course, as always, Todd Hultman, our lead market analyst, will be talking about today's WASDE report and what's going on and what he sees is happening there. I want to remind everybody that you're in a listen-only mode, but you can put questions into the question and answer box at any time, and we'll be watching for those. We'll address all the questions at the end of the webinar once Todd finishes. This event is also being recorded, and a rebroadcast link will be on our DTN website within 2 business days, and you can find that at the dtn.com site that you registered for this webinar. With that, we're ready to begin, and I'll turn things over to Todd. Todd, what did May have in store for us?
Well, thank you, Greg, and thank you, everybody, for hanging in there with us today. We are going to get going now and take a look at the May WASDE report. As you know, it's the first WASDE report of the year that sets out estimates for the new crop season. That's the corn being planted right now, and it's referred to as the 2024 to 25 season. I'll try to mention the word new crop. I think that's a little easier to track with, versus the current season that we're in, which is 23 to 24, and we'll refer to that as the old crop. So there are a lot of numbers. Hang with me today. I'll try to spell it out as clearly as I can. So let's go ahead and dive in and see what USDA had for the report. Greg, I think there's maybe a step you have to hand me the ball. The presentation, for some reason, it's not responding to me. While Greg works on it, let me see if I can explain best as I can what we're going to see in the corn estimates here. The new and I'll come back if we get our slide back. But just in the meantime here, our new crop corn production estimate from USDA is 14.86 billion bushels today. That's 482 million bushels lower than the record crop we got a year ago. And of course, a lot of that is largely due to the expectation of only having 90 million acres of corn planted. Now, we don't know if that's actually correct or accurate yet. We'll get the acreage reports at the end of June. But for now, USDA is looking for a smaller crop estimate, 14.86 billion bushels, and that was just slightly below expectations. The yield estimate, of course, 181. We knew that from the Ag Outlook Forum in February. The ending stocks estimate for the new crop season, 2.102 billion bushels. That's less than expected. The trade was looking for right around 2.25 billion bushels. So this comes in lighter than that, and it's somewhat good news for corn. Let me just check in on the prices at the moment. We have December corn up 9.5, November soybeans are up 2.5, and wheat contracts are up 14 to 20 cents at the moment. A little excitement over Russia events in Russia today.
Todd, you may be able to advance the slides now.
Oh, yes, I can. Thank you very much, Greg.
Yep. Sorry, everybody.
Thanks. Okay, thanks for hanging with us, everybody, and thanks, Greg, for finding the clue there. So as you can see, the far right column, this is the U.S. balance sheet from today's WASDE report. You can see the 181 bushel an acre yield at the top. The next arrow, 14.86 billion bushels, is the smaller production estimate that I was talking about we have for this year. The demand changes weren't too big or out of the ordinary. They're actually looking for a little more feed demand this year, 5.75 billion bushels. And of course, we have a long ways to go yet. As you know, the corn isn't completely planted yet. So there's still a lot of uncertainty ahead. The ethanol estimate was kept steady from the current season, 5.45 billion bushels. And the export total, they're looking for 2.2 billion bushels next year, which is just 50 more than the current season. And by the way, the export estimate for the current season which is the left column, was increased 50 million bushels today up to 2.15 billion bushels. So we have seen a good export pace, and I'll show a little more about that in just a minute. So we have an old crop ending stocks estimate just over 2 billion bushels, 2.022, and a new crop ending stocks estimate now 2.102 billion bushels. Actually very similar supply situations we're looking at in both seasons. And again, as I say, the 2.1 billion bushel new crop estimate is less than the trade was looking for. So their corn is trading a little higher at the moment. The difference here in the new crop season, we have an average farm price of $4.40 versus 4.65 in the current season. And the main difference there being that the 23 to 24 season started with a little higher prices, and we've seen a sell-off since winter until just recently. So for the day, I think I would say this is a bit of a friendly report. It's not significantly different than the current season we're in, but I think there's going to be some bearish relief today that it wasn't much, didn't have much larger supplies that some were expecting. Here is the old crop world balance sheet. So keep in mind, South America is still growing and harvesting their corn crops at the moment as we speak. And that season is still in the 23 to 24 season. That ending stocks estimate came in at 313.08 million metric tons today. You can see that in the upper right-hand corner. And that was slightly higher, I believe. Let me take, or excuse me, that was a reduction from last month's 318.3. So a significant reduction there. Where did it come from? Well, let's look at the second column, the rectangle on the top. We see two lower corn estimates for South America. USDA reduced the production estimate for Argentina by 2 million metric ton. Instead of 55, it's now at 53. And for Brazil, instead of 124, they've come down to 122. Now that's still much higher than CONAB's estimates of 111 on corn, and CONAB will have its next estimate for Brazil on Tuesday, May 14th. So stay tuned. We'll be reporting on that. In Ukraine, there was a slight increase. Last month's estimate was 29.5. This month's estimate, they're saying 31 million metric tons. So they're finding a little more corn production there in Ukraine. We can slip down and see on the lower part of the page, the corn import total for Canada stayed unchanged. Once again, 3.2 million metric tons. And note there was just one slight change for China. They increased China's demand estimate 1 million metric tons up to 307, but they did not change the import estimate for China. So as we go through the numbers there, basically we're seeing a bit of a reduction in the old crop estimates for Argentina and Brazil, and that's the crops currently being harvested. And as you probably heard, in Argentina, they've had wet conditions. They've had problems with leaf hoppers and some disease problems there. So even the local estimates are below the 53. The Buenos Aires Grain Exchange is now down to 46.5. So there's some divergence there yet that needs to be worked out. As we look at the new crop season, this is the brand new estimate, so there's no month ago comparisons here. These are brand new numbers for the new season, and keep in mind there's a long way to go on this season. You know, this includes a South American crop that doesn't get planted until this coming fall, so there's a lot of time. But the early estimate for the new crop season on corn, 312.3 million metric tons. Basically, that's just slightly less than the current season's total. So for world corn ending stocks, we're really not expecting much change between this current season and next year. And if the 312.3 came true, that would actually be the second highest in 6 years. So basically very similar to the supply levels that we're looking at here today. I also want to point out that as far as USDA's world production estimate for corn in the new season, 1.22 billion metric tons, that's actually down 1% from the current season that we're in now. And China, the line for China did not fit on here, but I can tell you that their crop estimate is 292 million metric tons. That's up just 1% from the current season. So not big changes in the world numbers, and that I think there's some relief there that it wasn't more bearish. Oftentimes when you look ahead to a new year, there can be a lot of optimistic assumptions. So this one's staying very close to the current situation we're in. This is how the corn supply expectations compare to previous years. And these are the ending stocks excluding China. And again, I like to look at this as the better metric because China does not export corn in any significant amounts. And so they really don't play a part in the export supply. So if we take China off the books, this is what the ending supplies of corn look like in the world. And the red bar is the new crop estimate. They expect that ending stocks estimate to come down a bit to 3.91 billion bushels. But as you can see, both the new crop and the old crop estimates are very similar to where we've been the past 3 years. So not a lot of change as far as the world supply expectations are. All right, let's also see what the market says about some of the things going on. And here's where I mentioned the corn export pace has actually been doing quite well. The most recent report we got, 1.356 billion bushels of corn has shipped already. That's up 30% from a year ago. That's a little above the estimated pace, and that I think supported USDA's move today to increase that export estimate 50 million bushels. So now it's up to 2.5 billion bushels. That seems like a reasonable change on USDA's part. The ethanol margins are actually starting to show me a bit of concern, and it's not because the business is so bad yet, but as the corn prices rise, those plant margins are tightening, and that's becoming a concern. So this chart shows this is USDA data that comes out every Monday, a weekly report, and the blue line is USDA's estimate of corn's processing value in the state of Iowa. So what do we get if we take a bushel of corn to the ethanol plant and transform it into ethanol and distiller grains and corn oil? The answer as of last Friday was $5.88. And with corn prices rising, those margins are starting to narrow. Back in the fall, we had margins in excess of $3 a bushel. Now they're closer to $1.51 just by USDA's report here. And this does not take into account any costs of processing or that sort of thing. It's just the theoretical difference between the processing value of corn products and the price of corn itself. So as you can see, the opportunity here is narrowing. And in fact, the past few weeks, we've seen a slowing of ethanol weekly production, but it's still holding up. It's still up 3.9% from a year ago in the current season. Corn basis looked much better when we were comparing to May contracts, but now we're comparing to July contracts. And of course, the basis doesn't compare as well in the month of July because we're starting to get more supply pressure from both Brazil and Argentina, even though Brazil, their safrinha crop is still in the field right now in hot and dry conditions. But typically that harvest pressure starts to hit about July. And so we can see here that the current basis we show nationally for the US, 23 cents below the July futures, is less than the 10-year average. And of course, it's much less than the tight supply situation that we were in just a year ago. So the basis is starting to reflect that, trading 23 cents below the July contract, and there's some pressure on demand there from South America. I think that's the bottom line from this chart. New crop corn prices. The good news is we've seen some nice rebound since late February, when corn prices were at extreme lows and they were heavily pressured by non-commercial short positions. As you can see on this chart, the red line shows those short positions, and they've lightened significantly, probably by over 100,000 contracts just since that February low. So there has been better support in the market, the shorts being forced out as prices have moved higher. And of course, a lot of that has come as a result of some of the weather problems that we've been hearing in South America, and the current concerns that we have a safrinha crop sitting basically in very hot and dry conditions that aren't going to go away anytime soon. So it'll be interesting to see just how big Brazil's production does turn out to be in the current season. All right, let's take a look at soybeans, what USDA said today, and we'll start again in the right-hand column with the brand new crop estimates. And of course, the planting estimate from the May prospective plantings report is 86.5 million acres. That's the top number we see there. The estimated yield, which was shown at the USDA's Ag Forum in February, 52 bushels an acre. So they're going to stick with that for the moment. It works out to a production estimate of 4.45 billion bushels in this new crop season. Now that's, excuse me one second here. That is 285 million bushels more than the crop that we just harvested in the fall of last year. So we're going to look for some bigger supply here. And if we just go ahead and drop down to the rectangle at the bottom, we're going to see that the ending stocks estimate is going to increase by 105 million bushels for the new crop season. So the old crops ending stocks estimate stayed at 340 today. The new crop estimate, they have 445 million bushels. If that works out to be true, it'll be the highest ending stocks for soybeans in 5 years. It's not an exorbitant amount, but it definitely is more than we've seen the past 5 years. As far as demand changes, basically we're looking at crush demand and export demand, and both of those are expected to be higher in the new crop season. We'll have to see if that actually works out to be true or not. But for crush, they're looking for 125 million bushel increase to 2.425 billion bushels, and the same increase for soybean exports in the year ahead to 1.825. And I just have to say, we're going to see an expectation for a big jump in Brazil production in the year ahead. If that works out to be true, it may be difficult to come up with that increased amount for exports. But that's part of the uncertainty we have about looking at a new season ahead. So right off the bat, we're expecting heavier supplies. And by the way, if you notice the average farm price at the very bottom of the columns, the old crop estimate, $12.55, is still expected as an average for the current season. And of course, that current season started with a much higher price. But in the new crop season, they're looking for an average of $11.20 with the modestly higher supplies there. All right, this is the old crop table for world soybeans. In an upper right column, you can see that 111.8 million metric tons of soybean stocks are estimated in the current season. That's down from last month's estimate of 114.2. So there was a bit of a reduction there. There wasn't a lot noteworthy in changes, except there was one change among the South American numbers, and that is, instead of USDA estimating Brazil with 155 million metric tons of soybean production, the estimate's now 154. So it continues to be much higher than other estimates for the most part for Brazil's soybean crop. And CONAB is at 146.5. We'll see what they say on Tuesday. But of course, as you probably know, there's been very devastating flooding recently in southern Brazil. And the soybean harvest in Brazil had gotten to about 90% complete. But that last 10% is going to be very, very difficult and actually impossible in several areas. So there's likely to be some more loss there. And I would say that's not reflected in this report from USDA and may not be reflected in Tuesday's report from CONAB. We'll have to see how that works out. Let's take a look. Now this, keep in mind again, these are very early estimate projections for the new crop season for the world. And as I say, that includes our US soybeans, which aren't completely planted yet, and South Americans crops, which get planted in the fall of 2024. So again, this is looking very far forward with a lot of uncertainty, but you can see in the upper right corner, the soybean stocks estimate 128.5 million metric tons. That is a new record supply total by far, if that works out. And it looks like the main contributor to that will be Brazil. If you look in the second column, Argentina's soybean crop is just expected to increase 1 million metric tons up to 51, but Brazil's crop is expected to increase 15 million metric tons up to 169. Now we'll see if that comes out to be true or not. And in fact, we really don't have a good handle on this season's crop total for Brazil yet. But that is the early expectation from USDA. The other thing I wanted to point out, if you look at the bottom line there for China, you're going to see that we have a higher import estimate total of 109 million metric tons. That's the third column from the left. And the far right column in that red box at the bottom, 126.8 is the demand estimate for China. And that also is much higher than the current season. So I think it's about 5 million metric tons roughly higher. So along with the higher supplies from Brazil, they are expecting somewhat of an increase in the demand situation from China. Okay, how are things looking these days for the soybean market itself? Well, you can see this picture of soybean exports, which is the red line in the current season. It's just not keeping pace either with last year or with the 4-year average. Last year is the green shaded area. The 4-year average is the black line, and we continue to be below both of those paces. As of the most recent report, the data was for May 2nd. Soybean exports are up to 1.42 billion bushels. That's down 18% from a year ago. Now, USDA did not change the export estimate here today, and the estimate is currently down 16% from a year ago. So it's not too far off current expectations, but as you can see, we've had a lot of competition this year from Brazil, and early in the season, we had softer demand prospects from China and a bit of a collapse in the market in January and February, but that's firmed up recently. So it'll be interesting to see how this develops moving forward. The soybean crush, somewhat like the ethanol margins, has narrowed recently. The soybean processing value, this one's for the state of Illinois, that USDA gives us. And so when you take a bushel of soybeans and crush it into meal and bean oil and soybean hulls, you get $14.11 worth of soy products. That compared most recently, this is as of Friday, to national soybean price of $11.54. So there's still somewhat of a healthy margin there, but there's a lot of concerns moving forward. We've seen a big drop off in the price of bean oil and the demand for bean oil being used to make biofuels, as bean oil is encountering a lot more competition from other feedstock sources. So it'll be interesting to see if I would expect to see more narrowing of this processing margin versus the soybean price as we move into the summer. The soybean basis, somewhat like corn, it's below the 10-year average, and it also is reflecting higher supplies. The Brazil soybean harvest was 90% harvested up until this recent flooding in southern Brazil really hit conditions hard. And in Argentina, they're almost halfway done with their soybean harvest in Argentina. So we do have a lot of new supplies coming to the market. And in spite of that pressure, it is interesting that the basis continues to improve somewhat. And this is versus the July contract month. But again, it is below the 10-year average at 63 cents below the July contract for the national average soybean price. New crop soybeans, what's the outlook here as far as the impact from the trade? And we see similar to corn, we had a pretty harsh sell-off early in 2024. Lows were made in late February, and a lot of that was accompanied by a very strong increase in speculative selling, which is noted by the red line as the non-commercial short positions. Similar to corn, that's backed off since early February. And of course, we've had some weather concerns in South America that have helped bring the soybean price back up a bit. And so we've seen some short covering, but overall, that's still a very heavy bearish position that the specs are hanging on to at the moment in soybeans. So it'll be interesting to see how this plays out. But I would suspect that today's report giving us an early expectation of higher ending stocks in the new season is going to be a little bit difficult of a headwind for soybean prices here for a while until we learn more about the actual planting situation and how events actually go this year. Here's the bullish riddle in soybeans that I was referring to earlier. These two lines are FOB soybean prices, so they're the prices at port basically, and they're the way we compare different export prices from different locations. The brown line is the FOB soybean price for the month of July in Paranagua, Brazil. And as you can see, that line had a sharp drop off in the month of January. We went from being somewhat close to US prices, which is the green line, by the way. That's the Gulf price at New Orleans. We were the two prices were fairly close and competitive near Christmas time, somewhat. But then when the rains hit in Brazil and the crop conditions seemed to look much better and they lost some of those drought concerns, there was a very sharp and distinct sell-off through the month of July. And at one point, the price in Brazil got to be roughly $1.75 a bushel less than the US price. And of course, that was exerting tremendous bearish pressure on our US prices here at home as we were quickly losing out on the export season and everything that goes with it. Since the end of February, however, you notice that, boy, that price of soybeans in Paranagua, Brazil has rebounded quite sharply. And we've gotten a big jump here just recently, coinciding with the news of flooding in southern Brazil. Now, instead of Brazil's soybeans being over $1.75 cheaper than ours at the Gulf, now they're just roughly 12 cents a bushel cheaper. Now, keep in mind, if we both ship soybeans to China, the Brazilian ports have about a 40 cent a bushel advantage over our shipments from the Gulf. If we ship from the PNW, we're cheaper than Brazil on the transportation costs. So, of course, the bulk of our soybeans come out through the Gulf, but I don't want to ignore PNW and the nice advantage that they have shipping soybeans over there. The takeaway from this, the point that I should be trying to get to here, is that here in early May, it's uncommonly early for these two prices to converge this quickly. And it makes me wonder if China's demand for soybeans hasn't been stronger than expected. And that, along with perhaps some combination of Brazil just not having the supplies that were anticipated earlier this season. So this is a very potentially bullish situation I'm monitoring here. I have to say the trend in soybeans for our U.S. soybean prices is up right now, but I can't say that I see a significant bullish sign of um, expecting a big demand boost uh, before we get to fall yet. But this definitely is something that we'll continue to watch as it is quite interesting and unusual. All right, let's go ahead and jump in and see what USDA said for wheat. Again, we'll look at the new crop estimates on the right column first. The wheat planting is expected to be 47.5 million acres. That's at the top of the column. Yield expected at 48.9, slightly better than a year ago, but not significantly better. Maybe a little bit of a surprise there. The production estimate for U.S. wheat came in at 1.858 billion bushels. That's up from a year ago, but to be honest, given how winter wheat crop conditions seem to be much better this year than they were a year ago, um, it's maybe a little surprising to me that we're not expecting a whole lot more production out of this year's U.S. wheat crop. And we'll get to the breakdown. NASS also had a report for us today which showed winter wheat estimates. And so we'll talk about how that showed up for the different classes in a minute. But this this wheat total today was actually a little less. The trade was expecting something closer to 1.89 billion bushels. Here, this comes in just under 1.86. The demand estimates were not much changed from the current season. We do see a 10 million bushel increase expected for feed demand in wheat. Not much change in the food demand or the seed demand, and they're expecting 775 million bushels of exports instead of this year's 720. And by the way, the current season's export estimate got bumped up 10 million bushels today. It was 710, now it's 720. USDA is expecting 775 for the new crop season. Now, if you've paid attention to wheat at all the past year, you know that exports have been very, very difficult to come by. And a lot of this is going to depend on Russia's success in producing wheat this year. And if you may have heard just recently, earlier this week, they got hit with frost in some central areas. The market's responding to that, responded in a small way on Thursday, and wheat prices are a little higher today as that news makes the rounds and circulates. But of course, it's not really confirmed yet just how much damage or how much crop was lost in the cold weather event. But the cold weather isn't gone yet either. They still have a cold weather threat into early next week. So there may be more to the story ahead. We'll have to see. The other aspect of Russia's crop is that it's been quite dry in southwestern Russia over the past several months, and they recently got some rain, but it still remains a dry situation for crops there. So there is a chance that Russia could come up shorter on their crops this year, and that would give that would give the entire world's export opportunities a better boost, even the U.S. included, in a small way possibly. The bottom line here, USDA is estimating new crop ending stocks 766 million bushels. That's up from 688 in the current season. And if true, that'll be the highest in 4 years. So it's still not a heavy burden of wheat supplies, domestic wheat supplies. Historically, we've had several years above 1 billion bushels. It's nothing like that, but it is higher than we've seen the past 4 years. The other thing to point out before we go to the next page, average farm price, they're looking at $7.10 for an average wheat price this season. That goes down to $6 in the new crop season. So again, we continue to adjust to a very low price environment for wheat. Here is on wheat, there weren't a lot of changes on the old crop ending stock side. I should point out what the overall number on the ending stocks. Here we go. 257.8 million metric tons of ending stocks, down from 258.3. So there was just a slight reduction to the old crop ending stocks estimate. What you have in front of you now is the new crop world estimate coming in at 253.61 million metric tons. Now that's down not quite almost 4 million metric tons from the current season. So we're actually looking for a little lighter supplies from world wheat production. And of course, one of the reasons that wheat has rallied lately is because we've seen some potential weather threats in a lot of the major regions. So we have a drought situation hanging on in Alberta. They received rain recently, but they're going to need a lot more. In Western Europe, France and the UK, they've had way too much rain, and there's more rain in their forecast for next week. And then we have the Russian situation, which I described a little bit ago. So here it is early 2024, and we already have several potential wheat problems to think about, and that's helped to give wheat prices a lift recently. World wheat supplies, USDA's new estimates compare pretty favorably when we look at world wheat ending stocks excluding China. And again, China produces a lot of wheat, as does India, but neither of them export much. So if we take China off the table there and look at the world ending wheat stocks, we're looking at the lowest total in 17 years in the new crop season, if that comes out the way USDA is estimating today. So they're looking for 121 million metric tons, or 4.45 billion bushels. Again, if true, that would be the lowest world wheat supplies, excluding China, in 17 years. So that's quite a comparison. Now, I can maybe anticipate some of the questions, and I have the same question myself. You know, last year you kept telling us it was the lowest world stocks in 15 years, but it sure didn't help prices much. And that's true. And the bottom line is it comes back to Russia. Are they going to be able to have a big enough crop again this year to dominate world exports and hold prices down, or not, or will their crop fall short? And that's going to be the key. Here's the NASS report that I mentioned, showing us a little more breakdown of the winter wheat estimates. For U.S. winter wheat on whole, the trade was estimating just over 1.3 billion bushels, but USDA came in lower, 1.278 billion bushels. That's up just 30 million bushels from a year ago. So again, even though we have much better crop ratings around the country in the crop progress report every Monday, we still have some concerns. And of course, the state with the worst winter wheat ratings in all of this has been Kansas. And I'd like to point out that DTN is going to be in Kansas next week, represented on the Wheat Quality Council's HRW Wheat Tour. So we'll be reporting from that. And of course, they've had drought problems in western Kansas once again. And you might say, well, surprise, surprise, it seems like they do every year. But this year it seems almost exclusively to western Kansas, where a lot other areas in the country have gotten a lot of moisture. That brings us to talk a little about the SRW crop too. So on the list of breakdowns, we see USDA's estimating a larger HRW wheat crop this year, 705 million bushels versus 601 a year ago. And keep in mind, even though Kansas still has a drought problem in the West this year, it's no comparison to what the Southwestern Plains as a whole were facing last year. That was a much more severe drought situation. So the HRW estimate, I think, is not too much of a surprise at 705. The SRW wheat is a bit of a surprise, I think, and this accounts for the lower total production estimate today. That came in at 344 million bushels. That is down from 449 million bushels a year ago. So there's 105 million bushel reduction on the SRW wheat. The trade for SRW wheat was looking for 413 million bushels. So this came in significantly less, about 70 million bushels less than expected. And it's a little ironic if you look at the weekly crop progress report. All the SRW states have very high crop ratings, but a lot of those areas have also had a lot of rain. And we also know that acres were probably much less in the SRW wheat region this year. And then lastly, white wheat up in the Pacific Northwest came in right on expectations, 211 million bushels, and that's just slightly more than a year ago. Oops, I'm sorry. This one did not get updated. I meant to pull that out. I ran out of time. There was just too many numbers in today's report. HRW wheat basis also below the 10-year average. So here we have a trifecta: corn, beans, and wheat all trading below their 10-year averages as far as basis for this time of year. On HRW wheat, they're 50 cents. The national index is 50 cents below the July contract. This is the fourth weakest demand situation that we've seen in 10 years. And that's no surprise given the difficulty we've had generating exports in the season. Kansas City wheat, as far as the spec positions go, you know, the specs have been in control basically since July of last year. They've been heavy sellers in this market and holding a big net short position up until just recently. And when the wheat problems around the world started popping in, and they all came in in roughly the same week, just a little bit ago, a couple weeks ago, it led to a lot of short covering, as we would normally expect. And once again, it just shows that weather's in charge, and weather will most likely have the final say. So is wheat going to trade higher from here or not? Really, it's going to be all boils down to weather. And of course, Russia is the most price sensitive area where if any damage is done there, that's going to have the most impact on the market. So that's basically what we're focused on moving forward. In conclusion, I'd say today's report was fairly neutral for corn, maybe slightly bullish when you consider the world ending stocks came in less than expected. US ending stocks increased slightly, but not as much as the market feared, I think. So 2.1 billion bushels might have been a relief to some folks. On soybeans, there's no doubt here this is a bearish outlook that we have for the new crop season ahead. Higher ending stocks in the US, 445, and a record estimate for world new crop soybean stocks is not going to help anything. But of course, that all depends on how next year's production go, or a lot of that depends on how next year's production goes for South America, and of course how we end up doing this year with our soybean crop. U.S. Wheat estimates today I would call basically neutral. We did see a slight increase in the U.S. estimate, but a decrease in the world ending stocks estimate. Neither of them were too out of line or unexpected. So we do have another WASDE report up June 12th. That's when we'll next be back. But Greg, this is a good time if you have any questions.
Todd, well, we're having a little bit of issue getting some of the questions in, but I've got a couple here. And honestly, I think I'll roll. We were just talking about wheat. So thinking about wheat and thinking about that Russia's, position in the wheat market as sort of the tail that's wagging the dog. I guess watching their weather and what we can get out of their information in terms of wheat harvest this year is going to be really important to where wheat prices may go, right?
Yeah, and boy, isn't that a challenge, Greg? Because, somewhat like China,
Right.
you have to be a little skeptical of the reports that come out of there. So once again, we're going to be looking for price clues to help confirm what we hear in the news and that sort of thing. And it's just once again a very tough place to get specific information out of, and that's become, of course, much more difficult even since Russia attacked Ukraine. So the sharing of information has gone down dramatically, and we always have to be a little suspect of what we hear.
Another one related to that, you mentioned that Jason Jenkins will be out on the wheat tour next week. Would you anticipate anything coming out of that might be a market mover? I mean, we have seen wheat tours in the past have some reports that come in that have moved the markets a little bit. You're probably not expecting that.
Yeah, well, there's some interesting questions, and of course, with wheat, you're always concerned about quality as much as quantity. And there's been an expanded reporting of stripe rust in I think 35 counties in Kansas was the most recent count we've seen. So it'll be interesting to see, is that a minor issue, or is it becoming a more serious? Is it a danger to actual yields at this point? And then the other part is this drought patch in Kansas. Just how big is it? How much does it spread into the central part of the state, or is it fairly well contained in the Southwest? Those will all be the kinds of questions we'll be looking at. And yeah, there is always a chance for a modest surprise out of there, but given the world of wheat, we're just a tiny raindrop in the bucket considering the rest of the world.
On the soybean front, last month we talked a little bit about that FOB price between Brazil and the United States as being sort of one of the clues that we were watching, and you're obviously continuing to watch that. Do you think that's probably one of the biggest pieces to watch in the next couple of weeks up until the next WASDE?
I would say outside of weather, it is the most interesting piece with the most bullish potential. And the reason I say that is because it reminds me a little bit of what happened in 2020 when all of a sudden China's corn and soybean prices started tracking higher while we were all concerned about COVID and the possibility of much larger ending stocks here at home. It was those rising Chinese prices that really eventually tipped the market off, that China had much bigger demand that year than anybody expected. And so when I start to see this situation with the Brazilian price, it makes me think very much of that, because I do think China is a big part of the reason those prices have converged lately.
Great, great. Well, I want to thank everyone for joining us today, especially on a Friday. These Friday WASDEs are sometimes a challenge to get together. As Todd said, our next WASDE report will be June the 12th. That's a Wednesday. I hope you'll join us then. As a reminder, the event has been recorded, and we'll have a broadcast link up on dtn.com within 2 business days of that. You can go into the events section at dtn.com and find the recording for that. If you have other questions for today, as Todd always says, his email is there, or you can email me, greg.horsemeyer@dtn.com, and we're happy to try to figure out what we can do for you, put you in touch with the right people or whatever there. I just want to thank everyone for joining us, and I hope you have a great weekend. And if there are mothers out there, happy Mother's Day on Sunday.
Thank you, everybody.